Today's market call is brought to you by MoneyLion, the first digital ecosystem for consumer finance, empowering everyone to make their best financial decisions. A good morning on the East Coast, a good morning on the West Coast, a good evening in Italy, where I just was, and of course, welcome to the great Carter Braxton Worth on this market call, September 15th, a Monday. Carter, how are you?
I'm good. How was Italy?
It was outstanding. Flew into Venice, had never been. I think that's one of those
Do a little
places
canal
on the
work.
planet. You gotta go. You gotta see it.
Yeah. It's sinking. The whole thing's practically underwater. But if you go
Well,
at the right time.
it's not sinking is the market. We'll talk about that in a second. But it was an outstanding trip, and as I've said a number of times, sometimes you sort of need to get away from the market and clear your head to sort of get a fresh look. But I come back here, Carter, and seemingly every day is a new high in the S&P, and we're going to look at some of your charts. But just in terms of what you've seen, when the markets are lower, and we talk about this, back in April, for example, everybody was talking about how oversold things were, and they were correct to point that out, and the level of pessimism around the market. But when things are on the flip side of the coin, when you have this exuberance, nobody really wants to talk about those same things in reverse. Yet here we are with an S&P making an all-time high, 66.17 as we're sitting here. It's a pretty remarkable turn of events.
Yeah, I mean, it just speaks to what this is, and they're referred to as risk assets, right? So here we are in January, February. It all seems fine. All of a sudden, the S&P drops 21%. One can always point to a reason. There is always a reason that is associated with it or causes it, if one can say there's causation. But then now we're back and then some, right? But again, you're talking about stocks like NVDA losing 40% of their value ever created just in a matter of weeks because of a kerfuffle, right, with tariffs. So basically what to do here and now is the market. And it depends always who you are in the market. Are there individual stocks to trade? Of course there are. Can one buy and sell the SPY versus is one a custodian of people's hard-earned and saved money, right? Is one running a pension plan for nurses and firemen and police and teachers and that kind of thing? It's a much different game. It's not about trading. It's trying to figure out what is the best way forward on a risk-adjusted basis. And does one increase exposure to tech, to growth, or does one try to find value, and so forth and so on? Or does one, and that's the job of the professionals, look out as best as they can, what are the annualized returns that can be expected from an elevated level like this? Looking out 36 months and so forth. Are they going to be below average? Markets generally return 10 to 12% a year, including dividends. That's what this year is so far, kind of average. And where from here, so forth and so on.
Well, let's throw an S&P chart up, and we'll throw the 150-day moving average. And again, it was back in April, and you brought up the absurdity of it. Of these are your charts, but let's take a look at our charts real quick, and we'll put the 150-day in. And when everybody was talking about the death cross that took place in whenever it was, late March, early April, that actually coincided with the bottom of the market, and you talked about that. And then subsequent, we had a golden cross as a 50-day cross back through it. But I look at it here, and I guess my question to you is, every time you get to these sort of standard deviations away from, again, in this case, the 150-day moving average, you do at some point have this mean reversion. Now, obviously, it doesn't appear as though it's going to happen yet. But is this telling you anything? This is a 150-day that's flatlining, but clearly starting to inflect a little bit higher.
Yeah, we're about 10, 12% above the 150-day. And that's, again, a beta adjusted for a low beta stock. That's a lot. But for a tech name, that's not a lot. But for the market, it's, well, not at or near a record. It's where history reveals this, is right to reduce exposure. So if you were to look back at any rolling 3-6 month period when you're more than 10, 11, 12% above the 150-day, it has checkback risk, which is to say profit takers emerge, and there's selling pressure associated with that.
It's hard to say, though, what's going to be the catalyst. Obviously, a little bit of a Fed meeting. We're through earnings, so that part is out. People will point to the seasonality that September brings into October. I mean, all those things are live clearly, but, you look at a day or at least the last, couple of trading sessions where theoretically it's been all systems go. The one thing that you've had spot on, and we're going to pull this up because now these are your charts. Let's talk about yields because the market took a sigh of relief, I guess, on some of the weaker data, and that's manifesting itself in lower yields. And, the charts that you brought forth suggest that there's more room to the downside in yields or more room to the upside in TLT.
I think that's right. I think if you were to look, you could AI search this, like when the frequency of the use in print, in television, in Wall Street research reports, the frequency of usage of the term higher for longer, it peaked in the autumn of 2022. And even though rates went a bit higher a year later in the autumn of 2023, that actually remains the real sort of hysterical peak. Never once did we close above 5, as all will know. And we continue to, and many people would say this is why the market's okay, be in this Goldilocks. It neither drops to 3% and where the R word comes up, recession, nor it spikes to 6% and chokes off a lot of things. But let's put some lines in so we know that we have a broken trend for what that's worth, ever so slightly. Another way to draw the lines would be this, and that's a bearish development as well. And then another way, whether you want to call these things and so forth, but to my eye, it's lower yields, and it's just a question of how much lower and what can the market tolerate. The general consensus is that low yields are good for the market, but that's not always the case. If that were the case, then at the COVID low, when 10-year yields were 50 basis points, the market should have been soaring 100% a day. It doesn't quite work like that.
Yep, no, without question. And right now it appears as though the market's taking great joy in the bond market, at least sort of cooperating. You look at banks, for example. I think the XLF is, again, we talk about it all the time, but not the greatest constructed ETF, but at $54 ish, trading at basically an all-time high. So things are clearly getting excited about that. The one thing that seemingly is about to participate, or should I say is on the verge of, is the IWM has mentioned, the Russell. And again, not the best constructed ETF, I agree, but here we are approaching levels that we saw in November of 2021, and it's mirroring the levels that we saw, by the way, in December of last year. So let's take a look at that and see, is this going to be one of these classic triple tops to the extent they even exist, or are we on the verge of doing something here?
Yeah, this is the hard one, right? And so there's either opportunity, if there are two ways to interpret it, right? The inability to participate to some extent is either a defect, right, or it is an opportunity, and it has to be one or the other. So we know that this is something that's below where it was 3-4 years ago. It's a virtual V. You can see this image, the collapse, the ricochet, and anytime, and this is the uncomfortable part, since 1999 essentially. 2000, anytime that one has made a bet that small cap will outperform large, it's been short-lived and it never sticks because the success is in the big names. The capital is in the big names, the balance sheets, the growth, the innovation, and so forth, versus this, which is heavily weighted to banks, which are not a growth business, right? They're highly cyclical and so forth. I guess for me, I'd rather stick with the SPY than the small cap Russell 2000, but we shall see.
Though the other one thing we've done a decent job with are some of these Chinese names, and let's take a look at the KWEB, because this is going to look, well, I mean, this to me looks like potentially a bearish to bullish reversal, and I say that in the context of flatlining since 2022 and now seemingly getting off the mat here. Here's my question to you, and I don't know if it's answerable yet, but what do we need to do in order to basically get that bearish to bullish reversal? Because we're close to it.
Yeah, it happened. I mean, it bottomed. Think about it, that's the summer of 23. We're now autumn of 25, right? So the bottom is in. It's just a question of how far it can go. Is it 50? Is it 51, 52, or is it 72? 100. But they all look like this. BABA looks like this, and Tencent and so forth. But generally speaking, I'd play for higher prices, higher levels.
Let's take a look at Google, because this is one where, we had a conversation about Google before earnings, and I said it potentially, and again, potentially was setting up for a bit of a head and shoulders. It needed to close above 195. I thought a 195 close would set us up for new highs. That's taken place. Now here we are making all-time highs at 250. Does this seem one where you need to sort of check back to that prior high that we saw earlier this year, late last year? I think it was like 214 or something like that.
Yeah, we gapped up there, and then we've gapped up again. I would be reducing exposure here. This is in the news. It's a catch-up trade. It lagged the S&P. It's now not lagging the S&P. It's based on news and headlines, and I guess more lenient penalties. Is that what it is for whatever their problem with the government might be, or the government's problem with them? But it's spiking to the point where reducing longs, to my eye, makes sense.
Yeah, I agree with that. And it's, I don't think you're saying it's over by any stretch, but it's one of those things where, I think that by the prior high was about 205 or 206. It would make sense here. You sort of have this crescendo top, and then subsequently move back and retest that prior level of resistance. Now we have a question about Caterpillar from Chris L, and he's talking about a triple top. I will tell you, I don't know exactly. I guess what you're looking at, Chris, is the July high, and then again the high we just made in mid-August or so. But I would just answer before Carter takes a look at this that that duration is not long enough to talk about double or triple tops. I mean, what appears as though it's happening here is a little bit of flatlining, but potentially before the next leg higher. But you see what he's looking at. What are your thoughts on that, Carter?
Well, they're not uniform. I mean, you have to have intermediate tops or intermediate bottoms, highs or lows that are at a common level, and there's no commonality to level, unless you're talking about this minor formation in effect since July. Late July, is that what if you're looking at
I think that's exactly right. I think that's exactly what he's looking at.
Yeah, but a minor formation has minor implications. I'm all for it. May it be so, but I don't see any great trade there.
Yeah, I agree. And the duration isn't the important part of these things. Again, I try to point out, and I think you back it up, the longer the span between tops, I think the more important those levels become. And we're looking at something that just took place a couple, basically a couple months or so ago. So I don't think it's as important as it would be longer term. The one that's important though today, and seemingly, I don't want to say it's breaking out because we're not at an all-time high, but let's take a look at Tesla, because I think that's top of mind for a lot of people. And here we are on the back of the news that Elon Musk is purchasing some stock. Good for him. I guess they say putting his money where his mouth is. But what are your thoughts on Tesla here?
Yeah, I'd fade this. So actually, we did a poll. We put our own vote in, of course, in each poll we do, exactly a month ago at 300, 312 a share. 60% of institutional clients were bullish, 59 to be precise. And so a clear, overwhelming number of the respondents calling for higher prices. It's now up 25, 28% since then. This is a time not to be chasing it, to be fading it. It's a gap associated with news, of course, a buyback and so forth. But again, this is a company that is still, and just now, interestingly, up on the year, incredible by a precious little. The day-to-day line is literally straight up, 350 to 430. Today's high, 425. I would sell calls or sell my stock into this news-related gap.
Exuberance. And yeah, I again, those prior highs at sort of those 350 levels, which we traded up to, failed a couple times, and we took that out. Again, just like we talked about in some of these other things, the back and fill, for example, down to that prior resistance level of 355 makes a lot of sense. So I'm sort of with you on this one. The one that, by the way, that continues to move, and You talk about duration. GDX is something that obviously we have both talked about, and we recently traded up to and have now taken out levels that we saw this time in 2011. I think it was actually the same date in 2011, if memory serves. So let's pull up a GDX chart and longer term. And, what are your thoughts? I guess my question to you is, are we on the verge of something epic here? I mean, we just went through levels, and you got to go back even longer than that, we haven't seen in, again, 15 or so years.
Yeah, you're returning to a former high in principle, slightly above it. What's interesting that the XAU, the older, right, the Philadelphia Gold and Silver, Philadelphia Stock Exchange Gold, cleared those highs of 2010 about a month ago. Here too, it's all about increments, right? Do you reduce exposure to something that's this steep, or sell calls, or take some measures? There's something called proof by contradiction. Try the opposite, extreme. How about we double our longs? Well, one could say, yeah, that's what you're supposed to do here, because this is an epic period for gold, because they're going to start cutting, and they're going to get back to that nonsense of printing, and it's going to be just desperate to, continue to keep the game going, and gold's going to go to much, much higher price. That's all fine and well. It's all about, though, the day-to-day trading. The day-to-day trading is very steep for the miners. AEM is the biggest, and it's as far above the 150 days you're going to get. I think you sell calls at a minimum, or reduce your position if you're long, 10%, 20%, that kind of thing.
I agree. I think that makes sense, but clearly gold's telling a bit of a story here. And I guess that's my next question to you. To the extent that, it even matters in your work, is it trying to be a bit of a cautionary tale here, or is it just divorced itself from everything else?
Well, let's start with when Bitcoin came out and they said it was digital gold, and everyone is abandoned. No, you don't hear that anymore. There's no correlate. Bitcoin is correlated with equities, with risk. It has nothing to do with gold. So that's been abandoned. You can AI search that. Gold, Bitcoin, it's the new gold. Now they don't talk about it, because once something's proved wrong, people shut their mouth. So that's out. Now the question is, what is gold? Some people love gold because they think it's because of deflationary times. Some people love gold because of inflationary times. Who cares why? The question is this a momentum trade that's intact? It is, but has gone a long way. I think you reduce, that's all. And you're getting some big shops that are known for making bullish calls and bearish calls at tops and bottoms. Like crude's going to go to 250 a barrel. Crude's going to drop to 10. Gold's going to drop. We've had a couple of those headliners just of late, prominent firms, top 4 or 5, leave it at that, calling for 10,000 ounce, this kind of thing, 5,000 an ounce. When someone who's not participated all along comes up with a superlative, just remember it's usually reaching a point where one should take the road less traveled.
Yep. And I'll say this in terms of superlatives and everybody getting excited. Oracle, and I know you probably talked about it with Dan last week, but the Oracle move was historic in terms of just the size of the company and what we did. I guess my question to you is, no, not a guess. My question to you is, is that potentially one of these, island reversal type situations where you have this huge gap? By the way, not an insignificant company. I mean, you're talking about $1 trillion company at its zenith last week. What are your thoughts about this?
Well, again, news related, with earnings quarterly report, you don't usually get moves like that from small technology companies or biotech companies. To have it in this big a company is rather exceptional. If even NVDA and some of its biggest moves has not moved like that, and then quickly fading. Just to put it in context, on that day, Larry Ellison was 100 billion richer. Added. I mean, think about just having 100 billion in the first place. It all feels as though that intraday high will stand for quite some time. So 348 or wherever that was. The risk is that it gives that all back. That seems unlikely. So a gap fill is not something I'd be playing for, but I would bet against volatility. Very volatile moment. And then, this is the kind of instance where you can sell premium, in my mind, both sides, and wait for the decay.
Yeah. What I find to be, it fascinates me is the size of these companies and the moves. I mean, we saw it was December of last year where we had a similar move in a Broadcom. I think the stock was up 35% or something in one day. I mean, again, not an insignificant sized company. Again, with Oracle, we just saw it here. even with Microsoft, if you want to throw a Microsoft chart up, I mean, to the extent that that stock had that kind of move, we all know the size of it. And, you know, that has been slowly sort of giving it back since the highs that we saw, I want to say, you know, mid to late July. And I don't know necessarily if that's telling you anything at all, but, you know, these crescendo tops in huge name stocks, I mean, you don't historically see things like this with companies of that size, quite frankly, because there's never been companies of that size.
Right. It's a very bullish tape. People are aggressive, but remember, nothing's new. Like someone said it was in a meeting with, you know, this is institutional, but people are saying, well, you know, this is new, NVDA, that kind of growth. And I said, you know, it's just not. I can show you Ford Motor, when everyone else is walking around trying to get there on a donkey or a horse, and you come out with a Model T. That's called technology. From 1910 to 1915, it is estimated that core earnings were growing 100% a quarter. Of course they were. You got cars and I got a horse. I'm going to sell some more cars. Who's selling cars? No one else. I got the only one. I'm still selling cars. Innovation is always this way. 100% a quarter for 5 years. Eastman Kodak, Polaroid, Xerox. What do you have? Well, when I want to copy this, I have my buddy copy it. And then I get a monk and he copies. I got a room full of monks. I got a Xerox machine. Let's play. The point is, when you have innovation, you grow like a weed. Innovation is a part of life, but there's no such thing as a growth company, right? There's only stocks in growth phases. When the Watsons controlled all computing, they owned IBM. Is it different this time? It's never different.
We have a question about DHI, and all these home builders start to look alike at a certain point. But, you know, we'll take a look at a chart, and I think the question is from Ramesh B. But let's take a look at it, because you obviously had these huge moves higher in the home builders into the fall of last year. The subsequent move lower with everything else, although, you know, it's seemingly the home builders sell-off lasted a little bit longer than the broader market. But now the home builders are back on the horse again, seemingly in response to that earlier chart that you had, yields going lower. Does this look like anything to you, or are we, you know, we setting up to sort of retest those levels or test those levels that we saw in the fall? What are your thoughts on sort of DHI,
Yeah.
I guess, but the home builders in general?
Yeah, sure. So they've come a long way. Yes, there's no question about that. And the question is, it's correlation. If you look at correlations, are the home builders correlated with the S&P closer or with the Russell 2000? They're with the Russell 2000, right? The correlation with the IWM is 70, probably 72, 73%. For the S&P, it's 50. Largely small cap stocks, these things. And they've come a long way. Today's action is negative. I believe they had earnings today, didn't they? Or no, maybe not. But either way, I would be fading the home builders.
Yeah, without getting too sort of macro-y, I do think it's important. Obviously, interest rates are extraordinarily important for these home builders. I think what's equally important, if not more so, is that the labor market. And if you're starting to see a deterioration in the labor market, I think that's going to negatively impact these home builders. So I think the market's getting enthusiastic with rates going lower. But the flip side of the coin is, one of the reasons rates are going lower is because the employment picture is getting, I don't want to say bleaker, but it's you know, not as robust as it was, if I may use that term. So that's an extraordinarily important, I think, input for the home builders. So I'd be a bit cautious here as well. We got a question about AVGO Broadcom, and you know, this is one, again, this has taken itself into the sort of new levels of excitement for people.
Yeah.
You know, they continually say things that the market really likes to hear. And here we are, a company that's now a $1.7 trillion company, again, trading to a certain extent like a biotech stock. So is this a breakout you continue to sort of follow? Because in April, not that it matters, but in April, this was a $140 stock, and it's now obviously almost tripled that.
Yeah. Again, a news-related gap, and now what? On the first day of a gap, some people are playing golf, or the committee hasn't met. After a second day, third day, fourth day, you have price discovery now. It followed through on the open that day. It was about 331. We're trading at 360. What's the event or act or news that has it follow higher from here, other than just euphoria? I would be selling calls or trimming my longs.
We have a question about Palantir, and I wanted to hit a lot of questions today because, obviously it's one of those days where a lot of stocks are moving. Well, this is what I'll say about Palantir. Since what? I guess it was August, early August, it has not participated in this broader market rally. Now, I have to sort of caveat that with saying, this is a stock that's had a heroic run, so I don't want to get too hyperbolic here, but there's been a lack of participation now for, I don't know, a month and a half. What are your thoughts on, if anything, technically, in terms of Palantir?
Well, a couple of things. For starters, this is a testament to just how high stakes everything is. On that swoon, tariff related, and it got down to the penny, to the 150-day moving average, it was down 47%. That is not for the faint of heart. 40% of the value ever created since they opened their business wiped out because of news or trade wars or anyway. Now what? It's entitled to not participate because it's been such a winner. I wouldn't read anything other than just more of a hold to my eyes. Sit there and hold it.
KVUE has been in the news with the administration, I guess specifically RFK's assertion that Tylenol in pregnant women is a potential cause for autism. I don't want to get into the political aspects of this, but in terms of the stock, again, not an insignificant company, $35 billion market cap, and we have a question about it. We're getting down to levels that we sold down to and held in June of 2024. That's going back a bit. So thoughts on this one? Has it exhausted itself on the downside? And no, this is typically something you don't want to sort of fight because the headlines are such, but the volume has also been such that maybe you've exhausted yourself on the downside.
Yeah, the thing is that the weakness, while it was news related, it was coming from a stock that was very weak before the event, before the news. Now, as to, again, the question of whether there's anything here, we'll leave that to the scientists, although I'm sure that the scientists at KVUE and others have a better insight into what's actually going on than some of the headlines in the news. I'd be contrarian here and buy it.
Yeah, I'm sort of with you on that one. Again, subject to, well, the tape bombs are what they are at this point, but you could also see a situation where in the absence of bad news, this thing starts to do a little bit of a levitation. So, you're always looking for things to trade against. And to me, that sort of crescendo that we saw last week might be one of those situations. I want to end this with NVIDIA. Again, I don't want to be hyperbolic, but since earnings, NVIDIA's been, sort of basically just sort of hanging around at these levels, sort of like, what's the word I'm looking for? Treading water, I guess, for lack of a phrase. Is this just sort of a setup for the next leg higher, or something happening in NVIDIA that we should be paying attention to?
Yeah, I just think it's a normal resting and consolidating after what is an epic move. You'll see here, this is a logarithmic chart. So muting the rate of change from linear to otherwise, but a huge move off the April low, as is the case with almost all stocks, and especially big tech names. Pair of twos, I guess, with a bias to the upside.
Anything in the energy space that interests you? We have a couple questions about that. I look at the refiners, specifically of Valero, that's traded very well. And again, without getting into the weeds, one of the reasons there is because crude price has been coming down. They buy crude to make refined products, and the refined products prices have been going higher. That's something we call crack spreads. And, this stock has been sort of acting in kind. We're not towards the levels that we saw in the spring of 2024 in terms of Valero, but, very slowly, and we're grinding towards that. What are your thoughts, if any, in the energy space?
Yeah, I like that. You pull up Apache, APA, a very similar setup. So some of these have all the elements of making a bottom. Left for dead, you see it's almost identical. And I would do it. I think you can't, unless you're just to, play 3 or 4 stocks over and over, which is fine too. If one wants to have some sort of diversification or play contrarian themes that have the prospects of coming to life, just as home builders were terrible 7 months ago until they came to life. Energy comes to mind, and versus the big boring sort of Exxon and Chevron, these have a lot of beta.
Yeah, I agree with you. I mean, the refining space has been, well, I mean, specifically Valero's had this little stealth move that not a lot of people have been talking about. I think it actually does continue. We'll see, because again, the crack spreads are such that, it's working exactly for them, and the stock should continue to go higher. I think the only thing really holding its back is its alignment or proximity to the space in general that obviously people don't like. Carter Worth, I want to be respectful of your time. You continue to kill it. Let's put up Carter's slide, because I just like saying the fun little slogan. There's nothing fancy here. It's just charts. Well, you are a fancy old-fashioned technical analysis. Nothing's like just charts.
Time for me to go to Italy. I haven't been in years.
You should. You're the man, Carter. Folks, we'll be
you.
back tomorrow. I'm in the seat with Danny Moses, so we'll talk to you soon.